Market conditions majority bullish. S&P futures relatively flat this morning, seeing it pausing right here at these all-time highs. Had a big confirmation bar on that Fed news a few days back, and have yet to make any kind of movement here. So not a lot of confirmation, not a lot of backing behind that thesis, and at least for continuation from this point, looking for maybe some new catalyst at this level. We're seeing expansion here on the weekly time frame as well as the daily, starting to flatten out here a little bit because of that price activity. Upper end of this range, obviously massive bull run here from April to current, and dealing with just these all-time highs now. Breadth of the market here, number of stocks in the S&P above the 50-day moving average, sitting at 65%. A majority bullish and compression right here. One of the possibilities is that we do get a breakout here of S&P 500, and that pulls breadth back up into that 80 range. So we get new all-time highs, we get confirming breadth that moves with that. That would be ideal for a top, for a reversal. This area right here, not so much yet, other than the fact that there is a little divergence between the market making new highs and the internals not making new highs, not as much participation, although 65% is majority bullish and moving in that direction. VIX today we're seeing at 1488, back in that 15, back under that 15 range, back to majority bearish. That's bullish for equities. Not a lot of fear, no fear in fact currently in the market. We see those spikes when we see a sell-off in the market. VIX will start to spike back up again, but we're now potentially making some new lows if we could break down under that 14 range. And that may set the table for some more follow through on the market currently where we're at. S&P 500 closing out at 14.0 yesterday. Dow Jones Industrial Average breaking above that demand block, and now holding, now watching for a retest of that 451 range on DIA, majority bullish and expanded. Weekly time frame similar to the S&P 500. Triple Q's also majority bullish. That had started to turn back. That actually got some weakness back here, back into that 12 and 2 range, and we're just so extended right here. We can certainly kind of float a little bit higher. You can see when we're expanded and trending higher, we can do that for weeks and weeks and weeks, particularly when we've got just such momentum and AI productivity, inflation coming back down, relatively flat. We'll see what the markets think of all of those scenarios moving forward. IWM, Russell 2000 running into some supply here at 234, but it's working deeper and deeper into that range, and we're starting to get expansion of trend here. We have this compression, and so there's demand coming back into small cap names, which is bullish overall for the market as a whole. USO getting some weakness. It had retraced, pulled back to that 72 range, that 50% retracement. Tried to make an attempt at 382, but couldn't quite hold it. And looks like it may be fighting with that range, getting a majority bullish here as well, but that move yesterday ticked things back down to 6 to the downside. Gold continuing to show some strength right here. Let me just squeeze this out just a little bit. We're in momentum on gold. 298 is still that playground low, and approaching a potential breakout here. If we can break out of that 316 range, 320 range, we could see a really nice rally in gold. It's been such a long time of compressing inside of this upper momentum zone. Keep an eye on gold as well. Dollar continuing to show some weakness overall. Seeing the 2-year Treasury at 365, continuing majority bearish on the weekly, getting some nice tight compression on that as well. And rates have just had that big run up, and now they've been relatively flat, and potentially could start to turn the corner and start to move back down again. We'll see what we get on the short end of that yield curve. Longer end of the yield curve, 10-year Treasury, we're seeing that majority bearish, 428. It's been in that range from 480 to 390. Tons of volatility back in April, relatively quiet now for the last few weeks. We are seeing the bond yield curve continue to improve. This is the spread between the 2-year and the 10-year. A healthy bond yield curve is moving in the up, floating in the up direction. Let's look at a little bit bigger time frame. And we can see here, you can see anything less than that yellow line is an inverted yield curve, where you have the 2-year that is paying more than the 10-year. So you're getting more yield for a shorter time frame. That's typically an unhealthy scenario. We want to see it doing what it's doing now and continuing to expand in that bullish direction. That's going to be interesting over the next few 6-8 months, as we're dealing with inflation still, and we're dealing with interest rates, and the Fed doesn't want to cut. They want to kind of leave things where they're at, but an increase in inflation is going to be a problem. And if we get a deflationary scenario, then the economy is moving into deflation, and we may have to raise interest rates. Or rather, move interest rates lower. The Fed may have to move interest rates lower in order to stimulate the economy. Keep an eye on that. Nothing super important, but just a general backdrop of where we're at in rates economically. A couple stock ideas for you to consider: SMTC in new confirmation bar, increased volume, a big gap there yesterday. We can also see FTKE. This is a really interesting price pattern because it's gone from $1, to $2 or $3. Lots of retracement. There's demand here, starting to move back in. Big confirmation bar. FTK, one to consider there as well. That'll do it for today's update. Everyone have a fantastic day today.